The S&P market is likely going lower into May 14th. Today is May 6th, and the S&Ps have pretty much done what we expected, having a bounce into Monday. It actually the market actually came down Monday and Tuesday this week so far. But we're looking for basically it topping in this next few days and shooting down into May 14th. Now, we don't know how deep that will be. It's very likely we'll at least get the gap around 5,300 by the end of next week. We do not know that we're going to retest the lows as we had anticipated earlier by May 14th. Okay. However, the fact that the market rallied stronger than expected does not necessarily mean it's more bullish. It's actually probably going to take longer to do any kind of retest that might be happening. And we're thinking that it could drag out until June 18th now. We're modifying our original thinking. The cycles are the same. We were thinking there was a low on May 14th, a high around May 23rd through 26th, and a low June 18th. We said that before, but now we're thinking that the lowest price may actually be June 18th, and that this first dip will be followed by a rally to late May, which will be minor, followed by a deeper decline into June 18th. However, we're not thinking this is a bear market. We're not thinking we're going to make new lows or anything dramatic. This is all setting up for the rally that we've been anticipating over the summer. So the idea is, what if you buy now? Well, if you're comfortable with a lot of pain, then you could buy now and sit through whatever's going to happen on the downside, and then it will eventually rally strongly over the summer into July, August, potentially even September. There are three different high points: July 22nd, and then August 8th, and then September 18th. They're all there. Probably September 18th is a lower high before a decline into the later part into the fourth quarter. All right. So there are a number of cycles that we're looking at. We've been talking about 11.5-year cycle numerous times. We talked about 3 times that, 34.5 years. And one of my students brought up the fact that 2 times that, about 23 years ago, turns out August of 2002 is repeating very, very closely as well. So that 11.5-year cycle is showing up 3 or 4 different places, including the 1926 market, which has been repeating remarkably well. And most of these call for further decline. And in the cases where we had a rally that was this strong, which we just did, the decline actually goes down until June 18th. So it seems like we're changing the story, but we're not. We're looking for some kind of pullback starting now, may have one more rally into late May, and then go down again in June. Then finally you can get an explosive, consistent rally, perhaps even taking out the highs of the year, okay, which would be very interesting. Now, the best match of all is the cycle we've been talking about for the longest time now, and that is 162 weeks ago. And it is set up, it's basically 3 times a 54-week cycle, and 2 times the 54-week cycle has been repeating as well, and 1 time is repeating actually upside down. And the 3 of them kind of agree on the pivots going forward, and they also agree that there's a good chance the market made a high just now, or it will maybe tomorrow on the 8th of May, there'll be another up move around the Fed meeting, and then it will hold for a day or so and then go back down again. So really short term, we're thinking there still could be 1 day up tomorrow before a follow through to the downside. And if it does, it still doesn't mean the market's going up. It just means it's trying to play games, and it's a topping pattern before it goes down into May 14th, a rally until the end of May, and then a decline into June 18th. Seems complicated, but it's not. It's just taking more time to do some sort of a retest. And then we go higher, and significantly higher. And that's been the primary thesis. We've had that for many, many months. If you want to understand how we figure these things out, we do provide a course called Trade Forecast Mastery, where we go through the details of how we figure out these cycles and the formula. It's a secret formula, actually. How to locate which cycles are repeating, which parts of history are repeating, and how to tell what's likely to happen going forward. Sometimes it's a little more complicated. Right now, the market is in a very volatile state. The astrology of it we've talked about numerous times, but the volatility is starting to shrink. In other words, the influences that were causing the dramatic decline, they've ended. And now we'll see whatever volatility we'll have will be on a lesser level. And then indeed the next potential trend will be up after this bottoming phase, which we think will continue potentially minimally till May 14th and more likely until June 18th. All right. Have a good trading week.